Following the adoption of a market-determined system which leaves Nigeria's currency to forces of demand and supply, the country's foreign reserves surges up to $33.95 billion compared to $33.94 billion it recorded the previous week. Also, the Naira appreciated yesterday by 4.4% to 743 Naira 07 kobo per dollar, the unified market-driven portal, leaving local currency volatile and under pressure from unmet forex demand. Well, let's break this down and understand what is really playing out. And the Managing Director, Cheif Business Officer at Optimus by Afrinvest, and Mr. Ayodeji Ebo joins me now via Zoom to continue this discussion. Thank you so much, Mr. Ayo. It's good to see you.
Yeah, good afternoon, and thanks for having me.
I'd like us to start from that point where we see a surge in our foreign reserves. Now, two things come to my mind. As we move on to the end of the year, the expectations that the Port Harcourt refinery would get on stream, and this might help reduce PMS imports. And of course, many think it will translate to reduction in forex demand and relative stability in supply. What is your overview of the present situation?
Okay, thank you. I would say that if we all cast our mind back to the last 1 or 2 weeks, that's 1 or 2 months, that's after the removal of the subsidy, which when you look at how NNPC has been funding the subsidy, it's called under recovery. It means from whatever resources that they realize from the sale of crude oil, before it is distributed or before it is also sent to the CBN, they take out that element of subsidy. But since the removal, it means that there's more dollars at the disposal of the NNPC to be able to pay into the CBN account. There was a statement that was made, I think, by the former CBN governor, that NNPC had not remitted dollars in the last maybe 6 months or 1 year to the CBN. So we feel that what is responsible for the slight appreciation that we are seeing now, because it's also a moving average, about a 60-day moving average that is used, it is as a result of the improvements in the remittance of dollars to the CBN. Compared to what we used to have before. So that's like one major reason for that we can be able to attribute that to.
Okay, we also expect increased inflow, that's foreign investment in upstream and the power sector. Many believe that this can also, one way or the other, help continue to shore up revenue for foreign reserves.
Okay, thanks. If we look at even the NSE data for foreign portfolio investors, as at June, the foreign investors still account for about 11% of total market transaction, which is the same percentage for May, which states that foreign investors are still a bit skeptical, still trying to watch before they jump in the market. And when you look at the first quarter data for capital importation, you see that FDI has shrunk to almost about $46 million, very minute. Also for FPI, yes, we saw a jump in the equities, we saw a jump in the investment in treasury bills, but it is still very minute compared to what we need to stabilize the economy. So we are not yet seeing that inflow from foreign investors. There's no major data to show that now. We are not seeing that. And with some of the things still happening, we can see that the spread, which initially after the unification or the collapse of the different markets into the investors and exporters window, now there's currently another major spread, which is also a major source of concern. So as of yesterday, at the unofficial market, is dollars depreciated to around or has stabilized in the last 3 or 4 days at 895 Naira to a dollar. Yes, you said there was appreciation at the investor and exporters window. So as long as there's that's almost 100 Naira spread. So as long as you begin to see that spread, you would see that people will begin to abandon the official window for the unofficial window because of the spread. So there's a need, if we want to begin to attract that inflow into the official market, there's a need to minimize so that incentive, minimize that spread. That incentive will not be there for a lot of those that may want to patronize the unofficial market.
Interested, getting more interested. Now, let's talk about the sources for FX. And one of it is diaspora remittances. And everyone believes that should help. Of course, we have non-oil exports and also proceeds from NNPC and all of that. What is your take, breaking that down? Which of it do you think, Nigeria, which can we take advantage of at this time to still help shore up revenue, which is the entire ultimate aim at the end of the day?
Okay, thank you. So I would like to start with these sources, which is from oil. We will need to, first of all, deal with and minimize oil theft. I know I'm not trying to say they can totally eradicate it. It's not impossible, but at least let's minimize it to such a way that we're able to benefit from that resources. So that would increase the inflow to the CBN. Secondly, if you look at the other markets, you look at the Eurobond market. The Eurobond market in the last 2 or 3 years, it has been like a major source of inflow. The government raised Eurobond from the international market. And when we now come to diaspora remittances, it is impossible or it's going to be very tough for diasporans, if I call them diasporans, Nigerian in diaspora, to convert at the official window. It's just about 2 months ago that the official window is now looking close to what we had in the unofficial market. So for most of what has been coming in through the unofficial market. So now for us to be able to attract them, we need to reduce that spread, because for Nigerians sending money home, do you expect them to change it at 777 or change it at 895? You begin to see, as long as there's a spread, and depending on the volume of money, or you even want to discuss with exporters. So if I've exported and I've gotten my dollars, at what rate do I change it? Do I change it at the 774 Naira at the official window, or I find someone, I put together a structure that I find someone that can buy it off me at 895 Naira at the unofficial market? So these are the questions or situations that begin to arise when the spread begins to increase. So for us to increase that inflow, that dollar inflow, there's a need to take care of that spread, to ensure that take policies. You have the 41 items still putting pressure in the unofficial market. If there's a central window, we will need to let everybody come and participate. I learned that, okay, maybe that window will no longer even be called the investors and exporters window. So let it be a general FX market where even the BDCs also come to participate. Once the spread is limited, there will be no incentive for people to just be coming to access dollar if it's not needed, and speculation will also reduce. So there's a lot of, we need to build on some of these policies. Like I will always say that the policy can be right. We've said, okay, let's use the managed floats exchange rates strategy. But if it's not properly implemented, it may become a bad policy. So there's still a lot that needs to be done to ensure that there's stability in the unofficial market. That spread needs to be collapsed. There needs to be increase in supply. So overall, there are a lot of things that we have to do for us to increase the FX inflow.
Interesting. But let me follow up with this and tell you that merging of the official and black market and all of that to allow market forces. Now, will this really help us determine the value of our currency? That's the Naira.
Okay, thanks. Very interesting question. To say there's this saying that markets would always win. So it's for the markets, it's demand and supply. So we're not saying a free float. What is causing the pressure is there's no sufficient supply. And once people begin to see that the supply is not sufficient, speculations also comes in, that people begin to buy. And for a lot of people, based on the projection, if we are not, you have a lot of people converting Naira to dollar, just keeping it in the DOM account. I think it's estimated at over $20 billion just in the DOM account, not for investment, just keeping that, just exchanging. So it's because of there's no stability. So you will see people betting on the Naira. So there's a need that we have to look at that policy for us to be able to attract the right inflow. Foreign portfolio investors is also required to create that stability that is needed.
Finally, I see that even global ratings agencies like Standards and Poor is already upgrading Nigeria's credit outlook. Now my question really is, it's like they're taking to some of these policy moves and they believe that's the way to go. How does this come to you?
Okay, thanks. For ratings, it's based on the model. They already have their criteria that is used. And for what has happened now, you can see that the inflow, the revenue for government has increased significantly. If you also look at some of their recommendations around removing fuel subsidies, it has also freed up a lot of resources for the government. We all spoke about the improvement in the external reserves. So that is a major consideration to have an upgrade. It was getting to a situation where subsidy may be even more than our total budget if we continue that way, because it becomes so opaque that it cannot even be accounted for. It's not based on what we use, but because of the complexity around it, it's already taken too much that the economy is suffering for it. So taking that out has freed up a lot of resources. We saw how much was available for FAC allocation for July because of the devaluation as well as improved revenue. So that in itself is a positive sign that we'll be able to continue to meet up our expectation. And there's a potential that if we back this up with also further positive policies in terms of implementation, it would also help improve our growth rate. So I'm not really surprised when you look at IMF report for the past 3, 4, 5 years, the exchange rate unification, removal of subsidies are some of the things they continue to emphasize that is really not sustainable. So I think that while we are seeing that upgrade, for us to sustain it, there's still a lot that needs to be done to provide confidence so that we begin to see these foreign investors come back, not just foreign portfolio investors, the foreign direct investors that will stay long and provide that long-term capital is required for us to be able to achieve that optimal growth rate. I will always say if we are growing at 3%, it's still like we are not moving. But we need to grow at an optimal level of over 5% for Nigerians to feel that impact of growth. We call it inclusive growth, which will feel the impact. Per capita income would increase, there will be more jobs. And once there's more jobs, you even see insecurity will drop naturally.
Well, it's a good way to leave it. Interesting conversation. Mr. Ayodeji Ebo is the Managing Director, Cheif Business Officer of Optimus by Afrinvest. Thank you so much for making real sense out of this topic of discourse. We appreciate your contributions as usual.
Always my pleasure. Thanks for having me.